Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like our reversion to mean systems for the S&P, like you see here, ES, various other systems, and of course our proprietary KISS trend following systems, which are exclusive to Breakpoint Trades. We've been doing this over 20 years. Steve and I have over 50 years of experience, so it's a great place to learn. Get awesome trade ideas, nice community. Anyway, before I get to this weekend's extensive market newsletter, again, I always just want to keep reiterating, check out our KISS trend systems. For now, this is still available to the public. Eventually, you're going to need a subscription. So go to systems on the website. Again, that's breakpointtrades.com with 2 T's. Link is in the description. Go to KISS STS tables. Go here and you'll see a list of tables with our proprietary KISS trend following system. Again, it's a trend type following system. It's a long only. It gets its entries from a variety of ways. And as price goes up over time, hopefully, then it's able to raise its stop up over time. We call that smart trailing stop. And if you look at the, we have various things you can click on here, little boxes. We have a basket, all the Nasdaq 100 stocks, all the S&P 500 stocks, all the top ETFs, the Dow Jones 30 stocks, the favorites. If you're a subscriber, you can set favorites and you'll be able to get email notifications whenever you get a new change to one of your favorites. But just real briefly, and I'm going to go ahead and move to our newsletter. So if you look at the basket here, you can see some of the things that are long, such as, S&P since March 31st, up about almost 10%. Apple system has been long since January 23rd, up almost 36%. AVGO up 76%. Meta up 169, 170%. Microsoft, again, you name it. And again, really cool thing. You can also click on the symbol here. So if you click on this, you'll actually get a dynamic chart. So here's AVGO. You can zoom in to the bottom. Move that up here. If you look here, you can zoom out on the chart. AVGO, the system went long back here in November. You can see how many times it's been able to raise its trailing stop. And that's the last thing I'll talk about. It's pretty amazing here. The system went long Meta on November 15th, and it's been able to raise its stop 30 times, guys. So pretty crazy, pretty cool. That's an idealized situation, but it can happen. And anyway, let's go and get back to the market newsletter. So this is a Breakpoint Trades comprehensive weekend newsletter, state of the market analysis, July 16th, 2022. This is our back-end recording system for our website. I'm going to go ahead and get this started. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone's had a nice weekend so far. It's Sunday afternoon, July 16th, and this is the comprehensive state of the market Breakpoint Trades newsletter for July 16th, 2023. Looks like I need to change this little typo here. So 2023, not 2022. Anyway, if you happen to be new here, these weekend newsletters are quite extensive. You can see we have 9 major tables of contents here. We discuss we glance at last week's stats, upcoming economic news for next week. We do a extensive top-down approach on the major indexes, our KISS systems, of course, and the other systems. We look extensively at market sectors, bonds, interest rates. We look at various indicators. We look at commodities, do a top-down approach there. We look at currencies, especially the US dollar, precious metals, and I'm going to follow up on some recent trade ideas. Now, a couple things here. 2 weeks ago when I posted my weekend newsletter, I stated that the first couple weeks of July historically are among the most bullish since 1922. So once again, seasonality's played out. The market is up nicely over the last couple of years. First couple weeks of July, which again, not surprising. We expected that. And last week, the major indexes gained anywhere from 2.3 to 3.7%. So nice gains. And every single market sector that we follow closed up strongly. So it was a broad-based rally. Okay. A couple other things. U.S. dollar had a huge 2.2% sell-off. That's a big dump. And I'm not going to go into speculation on why that's such a strong sell-off, but longer term implications there. But anyway, that obviously had an effect of commodities having a great week, and of course precious metals. Obviously, guys, the trend remains up, short term, intermediate term, long term. That said, short term here, we're looking at a possible correction here. As of late Friday, we can count 5 waves to the downside in what looks like a leading diagonal. And we also note various negative divergence on some of these indicators, the leading indicator sectors such as the XLK, XLC, IYT. Again, sport multiple points of negative divergence. Again, divergence is not a sell signal on its own, but it's there. So one thing we're going to look at here is if we do, get a correction pullback here, there's an open gap on the S&P down to about 43, which could be a magnet over time. Also, the market tends to be, hold up during earnings season. That said, the mega cap stocks are reporting about 10 days from now. So that gives us time for the market to have a little pullback here. And maybe then we'll get another rally up on the when the mega cap stocks report. Now, most of those still look fine, but we'll see if we get a little correction here this week or not. And we are then looking for a bigger correction sometime in the early fall. And again, longer term, like I said, you can use our KISS trend systems. They do a good job about, giving you some sort of stop to adhere to. So if the market just continues higher and higher, they'll keep you in the market. If the market has a rug pull before then, they'll get you out too with a nice stop. All right, let's move on. So before I get into the rest of the newsletter, I wanted to show you this chart, what I'm looking at very short term this week. So here's a 10-minute view of the S&P. Steve posted this on the Trading Community blog on the Saturday. So you can see here, again, it's a 10-minute chart. So on Friday, you can see this little pullback here, this 5-wave pullback. Again, the waves overlap here, as you can see. So it's not a impulse move, it's more of a wedge, like a leading diagonal. And if it's a leading diagonal, one thing we're watching here, here's a diagram from EWM Interactive. So if we have an Indian diagonal, we're looking for maybe a little rally up, lower high, wave B, wave 2. Okay, that would be a shorting opportunity. Or, we could just gap down and it'd be a more of a bearish 1-2-1-2 pattern. But if we do get a rally early Monday, I'll be watching for a potential lower high, kind of like you see here on this leading diagonal down. So we'll see if that happens. But again, I wanted to show you this, instead of having it in the middle of the newsletter when you guys might just gloss over it. You could also see this open gap on cash. That could be a magnet over time too. These gaps like to be filled. So that's what we're watching for short term, guys. Whether this plays out or not, we'll see. But short term, that's what we're watching. Next, image number 3. Here's let me move this over to a little bit. These are the 4 of the major FANG type stocks with the KISS systems. This is Microsoft, Apple, Meta, Amazon. Obviously, no changes here. These remain strongly up. You can see where the current smart trailing stops are. So for example, on Microsoft, 326.90, 327 roughly. Amazon, 125.60. Apple, 185.90. They look okay for now. We'll see what these does early next week as well. Next, moving back to the general market, item number 4. This is the index sector table, what transpired on Friday and of course last week. Friday was mostly a consolidation day for the market, and but for the week the indexes closed up strongly, 2.3% to 3.7%, with the Russell leading slightly. As far as the major market sectors, we follow 20 of one of them here, and every single one of them posted solid gains for the week. As you can see, a lot of 2, 3, 4% gainers. And for the Friday, it was mostly a consolidation day. Currency-wise, again, dollar, big loss for the week, which had the effect of pretty strong rally on most of the commodities, except for natural gas, which was down about 1.7%. But strong gains here among everything, especially the precious metals, with the GDX up 8.5%. They've been leading the metal. Gold only up about 1.5%. If this sector pulls back, I'm watching for potential inverse head and shoulder pattern, which I'll discuss. And last week, the 10-year, 30-year fell nicely, as you can see. Market liked that. Next. Item number 5 shows the economic news calendar. So come Monday, we have Empire State Manufacturing. On Tuesday, retail sales, industrial production, housing, business inventories. You can see everything here on the docket for the week. And remember, we are in earnings season. A lot of the big cap stocks start about, 1 to 2 weeks from now. Next, moving back to some admin comments here. So here is an image I took from the website. And again, I already discussed this in the opening video for the YouTube. But if you're not watching the YouTube video, again, the KISS systems, remember, on the website, go to systems, click on KISS STS tables, and you'll be brought to a table here with these various buttons for these various baskets, BPT basket, the S&P 500 stocks, Nasdaq stocks, Dow stocks, ETFs, and favorites. And you can see on Friday, Tesla got a new smart trailing stop. A lot of these are up pretty nicely for the year. Nvidia, Meta up 170% roughly. I mean, that's pretty crazy gains, but huge moves there. But even things like the triple Qs here up 27% from the March 15th entry on the system. And the system actually made money there in January or early February. So for the year, the system's up more than that. But again, that's a great place, guys. These KISS systems are getting more popular. More of you are following it. Again, you can set favorites by clicking on the star. And hopefully this week we'll finally have that email working where whenever you get a change to your favorite, you'll get an automatic email from the website. Cool stuff. Next. Image number 7. Here's the daily KISS systems for the 4 major indexes. Okay, so the S&P here went long in late March. Since then, it's been able to raise its stop here 3, 4, 5, 6, 7, 8 times. So quite a bit of room here for the 43.30 smart trailing stop. Leaves room for a little correction here if the market does that like we're thinking. Here's the triple Qs. Again, you can see on Friday, little doji candlesticks here, probably pretty extended. Next, image number 8. This shows you, this is a yearly chart, so each candlestick represents 1 year, and for the 5 major indexes and some other sectors. So just giving you an overview of what things stand like this year. So the Dow's only up 4%. Remember last year it led. The S&P's up 17.3% now. Nasdaq's up an incredible almost 43%. IWM up about 10.6%. Commodities, remember they were leading last year. They were down 4.1% this year. What led last year is lagging this year. And TLT 20-year bonds are up 3.3%. Next. Chart number 9, here's a weekly view of the KISS system. So last week, the smart trailing stop moved up about 110 points from the 40-60 area to the 41-77 area. Remember, the weekly KISS system is like the daily, but like you'd expect, the smart trailing stops are given more room. And but otherwise, it's done a pretty good job here, as you can see. KISS system on the weekly went long last year. Got out for a profit, actually. Got out at 40.58. Got back in there in January before the daily. and you can see it's been overall doing very well. Oh, here's an important thing. We have a DeMark 9 on the weekly S&P. Again, doesn't mean we stop there, but we have a DeMark 9 there, so it could be a little place for a pullback. So be aware of that. Whenever you see the magenta color here, in case you don't know, that means it's a new smart trailing stop. So this week, that color will go away. But that's how I know just visually whenever they're new. Next. Chart number 10, here's a weekly view of the S&P. Just a standard chart. Again, we've had a hell of a phenomenal rally since the October lows. And we've rallied up here, the top of this channel. Here's a horizontal level, represents some important previous support resistance areas from the past, up in the mid 4,500. So we'll see how price does there. Next. Chart number 11, here's another weekly view showing the same channel. This also has those major fibs, 76.4 fib at 44.05, which we obviously achieved. The 78.6 fib at 45.34, which we got pretty close, or at least close enough for government work. We got the 45.27.28 last week. Okay. Bound here is this rudimentary cycle. Again, it hasn't been perfect, but otherwise it's pretty, it's been pretty accurate for some of these major lows and highs. And this has a potential little high in the market here coming around late July, so we'll see if that ends up playing out or not. Next, chart number 12, here's a S&P 500 Renko chart. Okay, I like these Renko charts, they're nice and clean. And you can see, remember, back in April I talked about this, whenever the S&P took out this August highs, that was quite bullish. That let the door open for a pretty good rally, at least up to this next area, which we're almost at now. Next. Chart number 13, here's the daily KISS trend system for the S&P. Again, I already showed this above, but no changes here. Smart trailing stops, 43.30. Ways away from here, if the market wants to have a little pullback, wave 4, not hit it and then rally again. That's what we favor for now. Instead of a major top here, if we get a pullback, we are looking for it to be a pullback and then bought again. But still quite a bit of room here with the smart trailing stop. It went long back here in late March. Next. Chart number 14, here's the 4 time frames. Again, quite extended short term here. I don't have a MACD on these charts, but we have a MACD divergence on these now. And on the 195 minute, that's a half day chart, in case you don't know that. We have a resistance cycle. So could be an area to pull back from, we'll see. Price did rally off that support cycle. We also have a resistance cycle on the 130 minute. We had a DeMark 9 just recently. So a little sticking area as well. Next. Chart number 15, here's the daily S&P 500 chart that we've been showing for a while, this big channel. We just continue to uptrend. We're working on this wave Y, wave 3, whatever. All these wave counts are now aligned up here. That's why Elliott wave, a lot of the skepticism out there is that, well, you always have to have multiple wave counts, and that's true. But a lot of times these wave counts will align for the same moves. And when you have bullish or bearish counts, both aligning for the same thing, that's pretty useful. So they've been calling for this. Again, we're quite extended here. You can see the little doji on Friday. We have this MACD divergence. So we'll see if we get a little correction here in the short term. Another thing to watch in this chart longer term is this trend line in the RSI. I've really come to like these drawing trend lines in the 14 RSI. When you get these trend line breaks, they're pretty good about giving you sell signals and buy signals. So whenever this trend line is broken in the future, that could be a good sell signal. Obviously, there's plenty of room still. Next, chart number 16. Here's a zoomed in daily view, just shows you the same channel. You can see that little doji type candle on Friday. Again, like I said, we're still strongly uptrending, guys. We're above the 5 EMA. Anytime you're still above the 5 EMA, it's a very short-term moving average. Again, you're uptrending. There's a lot of support here. I see a lot of bearish people out there thinking the market could top here and go straight down. Unless there's a black swan event, markets don't do that. Why? Because you have support on all these moving averages that are pointing up. Okay. Where the market's vulnerable to a larger decline is whenever price action is flattened out, allowing the moving averages to flatten out. That's when you get your bigger corrections. You have symmetry breaks, lower highs, but not from this. If we get a pullback from here, we're still looking for it to be bought. Again, these moving averages short term would be support. Next, chart 17, here's a half day chart. Again, shows you the same thing essentially. Next, chart 18, here's a 60-minute chart with this wave count that I've been showing since early June, which has played out. Back there in mid-June, we called for that little high at 44.50. Wave 3, we were looking for that as a wave 4 pullback. That's exactly what happened. It formed a wedge. Wave 4 rallied up, made another high. We called that as a wave 3 of 5, which was yet again a good call. ABC correction, and then we've been rallying up here in this wave 5. This labeling here, this is likely wave 5 instead of 3 here, which I'll show you in a minute. Next, chart 19, here's a 30-minute chart showing you this wave count. So we had this little ABC coil, we broke out of it, and you can see 5 waves to the upside. Anytime I see 5 waves, I know that the market's due for a reversal relative in that time frame. So because we have 5 waves up, the bullish view would have this as wave 1 of 5, okay? And, you know, wave 1 of 5, you get a wave 2 pullback, which again, wave 2s might pull back 50% roughly of wave 1. Then you rally again, but we're looking for some sort of maybe A, B, C correction here, something like that, okay? Let me redraw that again. So we're looking for some maybe ABC action here. There's also a gap down here, and then maybe we rally up again. That's what we favor for now. Again, we'll trade whatever is in front of us and what happens. Finally, chart 20, here's the 10-minute view. Again, I already discussed this in depth in the beginning of the newsletter, but because we can count 5 waves down on Friday, again, this is a leading diagonal because of the overlap. And what I mean by that is wave 4 overlaps the high of wave 1. But that's allowed for leading diagonals. We're looking for this to either form a, you know, if it rallies up, form a lower high, maybe Monday, Tuesday, then down. Maybe we fill this gap and then up again. That's what we favor for now. Another more bearish view would be an immediate gap down on Monday, which would be a point of recognition. Then a bounce, then down. So that's what we favor. Next, chart 21, here's the triple Qs. Just amazing strength here. You know, they blew out their 76 fib. Again, they haven't went back to the highs yet, but one hell of a move. Next, chart 22, here's the daily. So the daily, we rallied off this support zone, which we talked about last week. You know, we've been holding this 20-day moving average. Again, markets behave like this, guys. If they rally up in strong trends, they hold the 9. If they break the 9, they usually find support around the 20. Okay, if they lose the 20, then they often retest the 50-day. I know that's very simplistic, but it's a good guide. But here's the point. Short term here, we're quite extended. Notice that little inverted hammer doji candlestick on Friday, little warning. Shot across the bow, and we got MACD divergence. Again, it doesn't mean that's a sell signal, but you do have a divergence here. You have this doji, so it looks vulnerable here. Okay. You could also use this trend line over time as a good trigger, but we have plenty of room on that. Next, chart 23. Here's triple Qs on the half day. Again, we got up into this upper channel area, stalling a little bit. Next, chart 24, here's a 60-minute chart. You know, a week ago or so, I showed this ascending triangle, and that obviously played out. But while that played out, we now have a MACD divergence on the daily. Next, chart 25, here's the KISS trend system. Again, system went long back here on March 15th, I think it is, 15th or 13th. It's been on a raise its stop a dozen times, so it's nicely profitable. And again, short term, we're extended here, as you can see. And again, guys, the system is up more than what it shows on the table because what this shows our STS tables is just from this entry, but the system actually made money from this entry in January as well before it stopped out. But that's a good example of how the system can work. It took a long here in January, early January, stopped out at the 291, 292 area, then got back in a couple weeks later. Next, chapter 26, here's the 4 time frames. So very similar look to the S&P. We have a DeMark 9 and 130-minute chart there, so be aware of that. Again, you can see these support cycles, how they're good guides. Price stalled at them a couple weeks ago, found support at them and the ATR. Now we're pretty extended here with this DeMark 9. Next, chapter 27, here's the Dow. It still looks fine here. Resistance up here, short term, be aware of that. Next, chapter 28, IWM small caps. This coil played out. We drew this coil early this year, well ahead of time, rallied off the lower coil area. It's now near the upper portion of that coil. Next, chapter 29, here's the daily coil. Again, here's how you label these coils. There are 5 waves, A, B, C, D. We had this wave E labeled way back in March and April. We said one could go long there with a tight stop just below this trend line. And if you did that, that was a heck of an entry with a good risk reward as prices rallied almost all the way up in the channel. And that's the thing about trading, guys. It's not always about being right. It's about it being able to take trades where you risk very little but have a high reward possibility. So under those conditions, you don't have to. You could be right 50% of the time and still make money. We're right more than that, though. Anyway, so we were at the upper portion of this channel, so this is obviously played out. Next, chapter 30, here's a 60-minute view. Again, we had a little wedge short term. It's playing out. You have big support area below here to be aware of. So that does it for the major indexes, guys. Let's go ahead and move on. I'm not going to look at a bunch of indicators this weekend. Didn't see a lot standing out. Here's the VIX. You know, the VIX has had some nice buy signals when it closed back in its upper Bollinger Bands this year. Those have all been playing out. It's not quite at the lower Bollinger Bands now. Best probably to look at some intraday. The one thing I'll point out, though, is it is pretty low now, and the VIX does have some potential support right here where it could attempt to rally off of or form a divergent low there. So that's another possibility. Next, chapter 32, here's a VIX seasonality. And again, I don't know the author of this chart, but you can see the VIX tends to bottom in late July, and we'll see if that ends up being the case this year or not as well. But the VIX has been following this seasonality so far this year very well. As you know, the market has had a heck of a rally from the March area, and that's exactly the VIX historically has sold off from there. Next, chapter 33, here's the NYAD advanced decline issues. And it was above its upper Bollinger Bands late last week, so a little overbought. Next, chapter 34, moving to bonds. Here's high yield corporate. High yield corporate found support at this extended trend line, rallied up. That helped the market as the market tends to follow high yield corporate. That said, very short term here, high yield corporate is leading down. Let's take a look at that. So chapter 35, here's a 60-minute chart of the S&P versus high yield corporate. And you can see here how high yield corporate has been leading down much stronger than the S&P. So maybe this will drag the S&P down. Again, you can see very high correlation between the two instruments. So we also had a same thing back here in early July. High yield corporate was leading down stronger, and that led for a little more pullback on the S&P there before bottoming. Next, chapter 36, here's the 10-year Treasury yield weekly chart. So big pullback last week. Took back all that gains after breaking out of that channel. Essentially, you had a double top here. I was worried about that, so it's pulled all the way back now. That obviously helped the market. Next, chapter 37, here's the daily. So again, came back in the channel. It's still above its 200-day moving average. That's why I'm showing you the daily, 200-day and 50-day here. Next, Chapter 38, here's the yield curve, just showing you this. It's been negative, it seems like forever now. It's been negative since mid 2022. There is some divergence here where it may want to start coming back up. But one thing I will comment, guys, in the past at least, and I know this potential recession has been different from ones in the past. A lot of times in the past, whenever the yield curve has been negative for a while and then finally goes back positive, that's when you have your real recession in the economy, is when it actually goes back up. So we'll see if that ends up being the case or not. Next. Chapter 39, here's TLT, that's 20-year bonds, weekly chart. We've had it drawn like this all year, and you can see price pulled back to the channel line, and what do you know, bounced off of the channel line support. Next, chapter 40, here's the daily. Another thing to watch here short term, again, we had a rally back last week as rates pulled back. You had the confluence of moving averages here, resistance, and a downtrend line. All right, let's move to market sectors. So, chapter 41, here's XLK technology. Again, this has been one of the strongest sectors this year, has all those FANG type stocks, Meta, Microsoft, Nvidia, etc. So this little ABC correction coil resulted in yet another move to the upside, which we expected. That said, note we do have MACD divergence here. The MACD is lagging. Again, divergence is not a sell signal on its own. If price just starts rallying up strongly, that divergence can be negated. But think of it like a yellow flashing sign when you're driving. It just means proceed. It doesn't mean you pull over, right, and stop your car. It just means you proceed with caution, be a little more careful. And that's the same thing here, okay? But we do have this divergence, so it is set up here if it wants to pull back. Also note the trend line on the RSI 14 is a good guide. Next. Chapter 42, XLC communications sector. Again, just a hell of a uptrend here. Little pullback short term. It's a little MACD divergence. Note the coiling in the RSI. Next. Chapter 43, FNGU. This is the FANG ETF. Last week I was showing it as a coil. I said it looked like it wanted to pop out again, and that's what it did. But that next pop looks more like a fifth wave. You have MACD divergence set up. So now that we got that pop and we have a divergence here, now I'd be a little more cautious. And by the way, the KISS system for that, let's just take a quick look at that. The ETFs. FNGU, the system went long on May 10th. The KISS system would be up 87% on this ETF. From the KISS system would have went long basically back here in early May. Pretty damn good entry, pretty good profits. Next. Chapter 44, XLY, consumer discretionary services. Again, one hell of a rally here. Again, quite extended here. Look at these dojis. Some RSI divergences to be aware of. Next. Chapter 45, financials. Nice little pullback on Friday. Again, you could also pause the audio or the newsletter video, read this. But one thing annoying, JP Morgan made nearly $1 billion from the acquisition of FRB last quarter. So taxpayers paid that out. JP Morgan gets the profits. Doesn't seem fair. Next. Chapter 46, here's XLF on the 60-minute time frame. Note, clear 5 waves to the upside, which with MACD divergence, by the way, 5 waves always have a MACD divergence. That's one thing we've learned. So likely area to pull back from, correction. Next. Chapter 47, XOB materials rallying up into this supply zone, stalling for now. Next. Chapter 48, transports. We identified this as a long back in June on this tight wedge type flag, and it played out pulling back. Finally, you have some nice divergence up here at the highs. Short-term supports this 9 EMA. Remember, guys, that as I stated, if the 9 EMA is lost on a closing basis, not an intraday little wick, candle wick like you see there, but on a closing basis, you almost always test the 20. So that'd be your next target. Your MACD is also close to crossing. Next, chart 49, airlines. That's been one of the star sectors, subsectors in the transports. Finally pulling back a little bit from that divergent high. Again, it had a hell of a run. Next, chart 50, XLI Industrials. Up 2.25% for the week. Remember, this made new all-time highs a few weeks back. Very strong area. No bear market there. Next, chart 51, XLI and the daily, again, quite extended here, but still above its 9 EMA. Next, chart 52, XOV Healthcare. Coiling, we like these coils. They can produce big moves on breaks, so we're watching this. Remember, this is tradable. Next, chart 53, XOP Consumer Staples, also coiling, little small coil. Next, chart 54, utilities, kind of a larger coil as well. Next, chart 55, home builders, been in Fuego. Again, quite extended, but it is what it is. A couple little dojis here short term, been going parabolic. Next, chart 56, there's the weekly view, almost back to the 2021 highs. Hell of a recovery. Next, chart 57, energy. So energy had a nice little pop early last week and the previous week to the early last week, but stalled at resistance here. Little bearish engulfing candle sell off on Friday. Not pretty. Now we'll see if it can form a higher low. Again, you got big support down here as well as the moving averages. Next, chart 58, oil services. This looks better. Again, pulling back a little bit, but it's much stronger than XLE. Logical to expect a little weakness up here near the previous highs. So for now, to me, this looks like it maybe just wants a some sort of ABC pullback and then rally again. We'll see if that plays out. Next, chart 59, here's oil services on the weekly. Again, oil services found support in this demand zone near this weekly uptrend line, rallied up nicely. So far, it's finding resistance at the first test of the supply zone. You see that, guys? The first test of the supply zone, it's pulled back from. Okay. Now, as I commented before, so let's say it pulls back here. If it can eventually take this out, the supply zone, this is a really thin zone. Look at the price of a volume. It's almost nothing. So it would easily then be to rally up and fill that. But for now, pulling back from here makes sense. Next, chart 60, here's the bullish percent energy index. It's kind of like a system chart that I made. So this gave a very reliable buy signal when the BPDR was oversold range here. Remember, the BPDR is normalized to percentage, so it can only go to 0 to 100%. When it gets in this area, it gets oversold. It gave a buy signal when it crossed over these two moving averages, the 9 and 20. And it's now in the slight overbought area. But nice entry, nice trigger. Nice trade from that entry. Next, let's move on to commodities. Chart 61, DBC weekly. DBC for the week up 2.8%. Again, it's been forming this very large potential wedge pattern for the last year. Found recent support at the 200-week moving average. I would like to see it strongly break out of here. A couple other things to watch are the ribbon. Want to see that go back to bullishly stacked. You also want to see a good break of this RSI over the 50 area for confirmations. Next, chart 62, there's the daily chart, shows you the same wedge. Now here, the way it's drawn, you broke the wedge. So what to watch for here is if this broken trend line acts as support now and an area to rally off of, okay? Next, chart 63, crude oil. Rallied up to the 200-day moving average, pulling back. This 200-day moving average has been a sticking point, okay? It became resistance back here in August last year. It was retested there in April this year, found resistance, and once again here. Now, we'll see is that it, or does it pull back here and eventually break it? But for now, logical to find resistance there. Next, chart 64, natural gas still in this big old basing pattern, pulling back here. Next, chart 65, copper down, or this is the daily. Nice rally off that lower trend line. Got over these moving averages recently. Little pullback on Friday. Had a good week though. Chart 66, there's the weekly chart, up 4% for the week. Next, chart 67, uranium, that's the daily. Had a nice breakout and rallied off of this demand zone early last week, but big pullback on Friday. Big bearish engulfing candle back to these moving averages. Finally, chart 68, here's the monthly chart of uranium that I've been following for the last few years. I started following it back in 2020 when it first broke over this nice base trend line. Gave a great double trade from there all the way up to almost the 30 area. It is forming a coil here, so going to watch this. I think eventually it's going to make a big pop from this. Next, chart 69, DBA agriculture up 2% for the week. Finally, chart 70, DBA on the daily. Take a look at this, guys. Broke out of this channel, rallied up, pulled back, found support at the extended trend line of the channel, which often happens in technical analysis. That's why I always state, extend those trend lines out once you've broken them, because many times you retest it. Retested it, nice rally off of that area. Moving on. Chart 71, Bitcoin, really no changes here after breaking out of that wedge. It's still mostly going sideways. Now, last week we had some big up moves in a lot of the stocks like Mara, MSTR. They all pulled back though on Friday pretty good. Next, moving on to the US dollar. Boy, oh boy, this is the weekly chart, down 2.3%. That is a big down week. It usually doesn't move that much. I mean, there's a bigger candle here last year. Not surprising given that last year, but this is, as far as candle sizes, this is one of the bigger candles you're going to see on a weekly chart. Back to its 200-week moving average. Otherwise, there's a demand zone down here that could be a target as well. Next, chart 73, there's the monthly chart. We had this chart drawn mid last year as at wave 5, and that has played out perfectly with a big sell-off since then. Next, chart 74, here's the daily chart. You can see we busted that coil down strongly last week. It is overbought, oversold here a little bit. You can see the little doji. We're extended away from the 9 EMA, so would it surprise me to see a little rally up in the dollar early this week, maybe at least back into that 9 EMA. I think that's something that we could see. That may also produce a pullback in the precious metals area, and I'll talk about that next. Chart 75, there's the weekly chart of gold. Gold up 1.65% for the week. One thing to look here is the stocks actually led here recently on the ratio. Again, gold, as you know, pulled back from that triple top in late April, which we expected. That also played out seasonality-wise. Now, seasonality for gold tends to be bullish here in July, so far that's been the case. Next, chart 76, there's the monthly view. Again, this shows you the idealistic bullish view where this pullback is some sort of wave 2 of 5, and eventually once it's over, it's going to go up to new all-time highs in a wave 3 of 5. Next, chart 77, here's the daily view of gold. Again, we were monitoring this three-wave ABC pullback into this support area. You have a confluence of fibs there, 38 fib, 61.8 fib. And we rallied out of it. We had a trend line break on the 14 RSI. Remember, I like these trend line breaks on that. So everything lined up. Price rallied, broke out of the wedge, rallied up to the 50-day moving average, stalling. Now, here, the shaded area, what I'm drawing here, if gold pulls back soon, it could form potentially an inverse head and shoulder pattern. Next, chart 78, here's another daily chart. This has the GDX-GLD ratio. Remember, you want to see the stocks leading, and of course, they've been leading here, as you can see on the trend line break. The RSI trend line gave you an earlier entry, though. Next, looking at some other charts, chart 79. I made these up last week. Here's the Swiss franc versus gold, and they follow each other extremely well. Just look at this correlation here. Swiss franc versus gold. Swiss franc, of course, is in blue. And quite interestingly here, before gold started rallying, the Swiss franc was rallying earlier, so it gave you an early warning for gold. That's something to watch for in the future. Next, chart number 80, here's the Japanese yen versus gold, and they're also extremely correlated. But interestingly here, you've seen the same thing. The yen started rallying before, and the yen topped before gold did in late April. Next, chart number 81, Japanese yen. I meant to have this up with the US dollar. I apologize. You can see the Japanese yen, this thin zone, demand zone, where it found support last year. It came back into it again here. Next, chart number 82, silver, weekly chart up 8.2%. Also, could this be a large inverse head and shoulder pattern forming? Perhaps. Next, chart number 83, silver on the daily, essentially had a perfect A, B, C into the 200-day moving average. Just absolute textbook. 3 waves. Again, if you don't see it easily, just take a look. 1, 2, 3. And boom. Whenever I'm looking for an uptrend, if I see 3 waves down, I look to buy it. If I only see 1 wave, I don't buy it. Next, moving on to GDX, chart number 84, GDX. Same deal. So it rallied off the support, broke out of the channel. It's stalling here a little bit as this resistance. Could that be a neckline and it pulls back here, forms a right shoulder of an inverse head and shoulder pattern, and then rallies again? And that's a possibility to watch for, especially if the dollar bounces from that oversold condition. So I'll be keenly watching for this potential this week. Next, chart number 85, there's the weekly view. GDX up 8.5% for the week. Outperformed gold. You can see the moving average ribbon was pinching. Next, chart number 86, GDXJ. Again, just showing the ETFs here. You had 5 waves down, broke out of the channel. You also have the same potential inverse head and shoulder pattern here. Again, these broke symmetry on the rally, so I am looking for a higher low if we pull back here. Next, chart number 87, here's the bullish percent gold miners index, BPGDM. Remember, this crossed up over its 8 moving average last week for a confirmation buy. You can see the last sell signal, the last buy signal, sell signal. Next, chart number 88, SIL, that's the silver miner ETF. Again, same deal, 5 waves down, MACD divergence. The rally broke the trend line and broke symmetry, which means that was the largest rally in the downtrend. So the fact that you got that, just like the other things, if we get a pullback, that suggests a higher low than another rally up. Next, chart number 89, SILJ, that's the silver miner junior ETF. Same deal. You had a wedge, you broke out, broke symmetry. We'll see if we get a pullback here. Let's take a look at some individual names. Chart number 90, EXK, silver stock. Hell of a rally off this demand zone, as you can see. It was an awesome pick by us. Next, chart number 91, pause. It's a silver stock. Again, a lot of these look similar to those ETFs. You had a wedge here, 5 waves down, MACD divergence. And a lot of these, again, you have potential inverse head and shoulder patterns developing if you get a pullback. Next, chart number 92, AEM, same deal. Beautiful move out of this wedge. Now we'll see if we pull back. Next, chart number 93, AU. This had, again, a perfect textbook 3-wave pullback. A, B, C, rallied off the 200-day moving average. Now, this one, you don't have an inverse head and shoulder possibility, but it gave a great trade off that 200-day moving average. Next, chart number 94, MUX. This was one of the stars last week. From a percentage standpoint, had a hell of a rally out of that pattern, out of over the trend line. Next, chart number 95, RGLD, another one that's been on the list. It held this demand zone back in late June. rallied up to the 50-day moving average where it's logically stalling a bit. All right, guys, let's follow up with a few recent trade ideas. I didn't add anything new here tonight. So Charbert 96, CLSK. This was a long idea of mine I put out in late June. Was a coil pattern. It had the volume, higher volume expansion, which made it stood out. It broke out here and one hell of a move here. It exceeded its symmetry target. Congrats if you caught this. Heck of a percentage of move. Next, Charbert 97, TSE. One that broke out early last week. Rallied up. The pattern measures up to this 200-day moving average, but hopefully you took some initial profits on that move up. Again, it was on expanded volume. It's pulling back. Remember, in technical analysis, a lot of times previous resistance is back tested, and it could do something like this. Back test and rally off of it. Next, Charbert 898, DO, Diamond Offshore, was a recent energy play from June. Hell of a move out of that coil, pulling back now. Charbert 99 rig was another one. Heck of a move out of that coil, pulling back now. By the way, this is potential support. Next, Charbert 100 PRMW. This was a coil or a wedge pattern of mine a couple weeks ago. Broke out, consolidated. It's now trying to rally up again. I still own this one. Next, Charbert 101 finger was a cup and handle. Broke out a couple weeks ago. Heck of a move up. I hope you took some profits as it's been pulling back. Next, Charbert 102 IDXX continues to work out. Next, Charbert 103 RVLV broke out of this nice base, gave us a trade, pulling back now. Next, Charbert 104 CCJ ABC pullback, gave a nice trade, pulling back on Friday. All right, guys, we'll see how futures open tonight. Futures open here in about 30 minutes. And of course, we'll see what happens tomorrow. Have a good rest of your Sunday and take care.